Welcome to EIS and VC Navigator, a podcast for UK venture capital. I'm your host, Brian Moretta. For an industry so focused on technology, venture capital has often been slow to use it, but that is changing. Empirical Ventures is using AI in its diligence and YouTube for sourcing, so it's really embracing the change. Today, co-founder and general partner Johnathan Matlock discusses how they use technology, as well as giving lots of insights into deep tech investing. If you enjoyed the podcast, don't forget you can subscribe through all good podcast services or players, or follow the link in the show notes. If you have any suggestions for future topics or guests, then you can email us at inquiries@harmanco.com. Without any further ado, enjoy the conversation with Johnathan. Welcome to the podcast, Johnathan.
Thank you, Brian. Great to be here.
It's a pleasure to have you. As usual, we'd like to start by getting to know a little bit better. So can you tell us how you became involved in venture capital?
Yeah, absolutely, Brian. So I probably had a non-traditional pathway into venture. I started out doing my undergraduate degree at York in chemistry. I spent a year at Roche in Basel. My experience working in that pharmaceutical company was everybody needed to have done a PhD in order to progress up that as a career path. In that classic, not quite sure what I wanted to do after an undergrad, all of my peer group were going off to do PhDs. I kind of thought, well, that sounds like the logical path. So applied to a few academic groups around the UK at Oxford, Bristol, Manchester, and eventually took up a PhD in Bristol. There for 4 years doing chemistry as a PhD. I then spent a little bit of time thinking about how I move out of the world of academia. And I was interested in just the kind of commercialization of science and how you move those things out of the lab and into the real world. So I spent a little bit of time looking at tech transfer offices and kind of that world, had some interesting ideas. But in the end, decided to do another couple of postdocs. So I did 2 further years of postdoc chemistry. And then again, the same kind of question cropped up, where do I want to be spending my time? What do I want to be doing in my career? And then, as is often the case, my partner, who'd moved to Bristol after doing her PGC in Oxford, had said, well, look, I've just been promoted. So I think she'd become deputy head of the school. I've moved here for you, for your career, because you were doing your PhD. Well, you can stay in Bristol now because I've just had a promotion. So I was looking around for things in the Bristol ecosystem and was fortunate to bump into a guy who I'd done my PhD with at the same sort of time, called Harry Dessequois, who'd started a spin-out company called Xylo that was looking to commercialize some of his PhD work. I think they just got their first Innovate UK grant when I applied for a role. I kind of saw it as a way to take that step out of academia to start applying chemistry in a commercial context, albeit my role was very much on the R&D side of Xylo. Anyway, fast forward 4 years, Xylo, which was developing a glucose-sensitive insulin, was acquired by Novo Nordisk for up to $800 million. At the time, it was the biggest exit in that past 20-year period for a piece of IP from a university spin-out in the UK, which is quite interesting when you consider the magnitude of that exit in terms of typical venture outcomes you need to drive power law returns, but maybe we can touch on that later. Mm-hmm. I then went full-time angel investing. So I decided to redeploy some of the capital I got from that exit as an early employee and the options that I had back into early stage companies. That allowed me to kind of step away from the lab entirely. There was kind of 2 phases to my angel investment. I did all of the classic angel mistakes, kind of big tickets, a few deals, felt like a lot of paperwork and companies to look at, and then decided to kind of refine my strategy, did smaller tickets, much higher cadence, and eventually ended up investing in 46 companies over a kind of 3-year period. And as I say, it was split into kind of 9 companies initially, and then kind of 37 or so companies in the sort of second phase of that. And that was really my entry point to then the world of venture capital. I noticed my angel portfolio was going out to raise follow-on capital. I was investing in deep tech and life science companies, pre-seed often as an angel round. And they were going out to raise that next round. And they kept coming back and saying, Johnathan, everyone keeps asking for a lead science investor. And I sort of sat there and thought to myself, well, I'm not really sure what that term means. And felt that there was an opportunity there to help angels better engage with deep tech and life science companies. I'd met a lot of angel investors by this point. I joined quite a few syndicates, and I was talking to them and they were like, oh, we just don't really touch those areas because either I just don't know even where to start diligencing the opportunities. And the second one is, and if I do invest in those areas, I very much just see it as like a bit of a punt. I invest and forget, and that's pretty much it. That just felt like we were doing these sectors a big misservice in terms of like how they were being sort of looked at in the angel market. So I ended up starting an angel syndicate with a former colleague of mine, a guy called Dr. Ben Miles, who had worked together at Xylo with. He'd sort of experienced the same challenge in the market from a company building perspective. After Xylo, he'd created a venture studio where he was co-founding companies with spin-out academics, acting as a commercial co-founder. And he sort of had the same problem, which is who's my ideal lead investor in that first round? So we started a syndicate that was called Science Angel Syndicate. We did that for 2 years, grew that to about 80 people in the syndicate, deployed £5 million into 12 companies. Things escalated. We applied to British Business Bank and their regional angel program to become a delivery partner and looking to get a co-investment vehicle that could invest alongside our syndicate. We had to get regulated to be able to deploy that capital. We did a member survey in, I think it was the summer of 2023. Where we asked our syndicate members how the syndicate was performing, getting a sort of NPS type survey. And some of the feedback we got was, guys, we really love the diligence that you're doing in-house. We really like the deal flow that you're sourcing. We don't have time to read a 50-page due diligence document outlining the pros and cons of a particular investment in order to make our own investment decision. We prefer it if you guys started a fund and therefore could build a portfolio of companies for us. And so it was really just this organic evolution into where we are today, which is what is Empirical Ventures. So that was the kind of personal journey I went on, which, as I say, I think is quite non-linear in terms of that stepping stone into the world of venture capital.
See, now with I don't know if with Empirical's the right thing or whether you have Empirical Ventures.
Yes.
So it's been running a couple of years now. Do you want to tell us a bit about where they are?
Empirical Ventures as a fund is designed to act as the lead investor for the best venture scientists in the UK at pre-seed and seed across any area of science. So we're building diversified, science-rich portfolios where investors in our funds get exposure to some of the cutting-edge breakthroughs that are coming out of the UK R&D base. We're purposefully not a spin-out only fund. We'll look at innovation coming out of corporate entities, of people who just, through their careers, have figured out something and decided to go down a route of beginning a startup. So we really do look across the spectrum. We do look at spin-outs, obviously. About probably 50% of our portfolio is from university spin-outs, just because of the nature of the sorts of sectors we're investing in. We have 36 portfolio companies at the moment. We have about 30 million assets under management. And the current vehicle we deploy out of is an SEIS and EIS fund that's an evergreen structure, and it raises capital on a yearly basis and deploys capital into 10 new companies each year is the broad strategy.
And you mentioned there that term venture scientist.
Yes.
Which when we spoke last week, you sort of mentioned. I thought that's a really interesting term. Do you want to maybe tell people what you mean by that?
Yeah, so we're actually really intentional in combining those two words. Scientists, because we're fundamentally looking to back world-leading experts in particular scientific or advanced engineering domains. And then venture, because we want to embody what are the fundamental skill sets someone requires to actually build a company. So that combination of both entrepreneurial skill sets and deep domain expertise is the sweet spot of what it is that we're looking for. One of our big bugbears in the world of commercialization of science is scientists can't commercialize research. They can't commercialize innovation. You hear this trope all the time. I think the nuance is much more nuanced than that. I believe, or we believe at Empirical, that venture scientists can commercialize research and are actually the right people to commercialize research when you're going from the lab into the first few funding rounds, pre-seed, seed. And I can maybe tell you why I think that is. 3 kind of areas. When you're talking about translation of research out of an R&D area into a commercial entity, all of the know-how and embedded knowledge that comes from doing that science is something you pick up and learn over a period of time. In academia, your time's relatively cheap, right? If you make a mistake or you forget to, someone doesn't, I remember when I was doing my PhD, I was making this photosensitive compound. Nobody told me that. So I spent 4 weeks making this compound, left it out on the bench in the window, came back the next day and it had degraded. And everyone said, oh yeah, that photo degrades that compound. You need to keep it wrapped in a foil vial. I'd lost 4 weeks of work. Well, as a PhD student, your time's pretty cheap. You do it again. You learn from mistakes. But all of that embedded knowledge often just doesn't get written down in scientific research. And as soon as you move into a commercial entity, well, you're now on the clock, right? You've got 18 to 24 months of runway. You can't afford to have little embedded knowledge slip-ups that delay your technical progress, technical de-risking by 4 to 6 weeks. So one of the things we really like about bringing people who've actually done the lab work out of the groups or out of the entity and into this commercial startup is it just brings with them all of that embedded knowledge. The second thing is like risk appetite. If you've been doing a PhD, you've probably been living off 15 to 20 grand a year stipend. You're probably of the age probably like 25 to 30 in terms of age. So your risk appetite to go and work in a startup in terms of personal responsibility, you're probably not at that point likely to have a mortgage. Families are probably still something that's evolving. So you just have this perfect alignment between risk appetite and also somebody who's sitting there going, oh, I can get 40K a year and give a startup a go. That sounds pretty good compared to the 15 to 20 grand a year I've been living off for the last 4 years. And even going then to postdocs, early career researchers, the same thing's true. They've not quite become academics yet. The pathway to becoming a tenured academic is pretty selective, and there are very few tenured academic positions for the amount of people that are going through PhDs and postdocs. So again, there's this really clear window of opportunity when these people can come in, start a company, de-risk the technology, move something up the technology readiness level or TRL scale, and actually get the company to a point where you've sufficiently de-risked a technology, able to raise capital, and then have the firepower to go and then bring in more experienced commercial operators with more specific focus as the company's evolving in its journey. And an example of that was one of the very early angel investments I made into a company. I won't say the name, but it was a company developing a novel type of battery technology. 2 founders, quite young, very ambitious. They did a small angel round. They did a friends and family round. They then did a small angel round. After the angel round, I invested in the company and sort of joined their board and sort of was helping them out alongside some of the other early Xylo individuals that I mentioned earlier. And it became quite clear that at a board level, we needed to up the experience capability of the company. And we said to the 2 founders, is there an opportunity here to go out and really get someone who's really exceptional from whom you can borrow the halo of that individual, right? And that'll help set you up to raise your sort of first seed round, as it were, from more venture capital type institutional investors. And they were able to go out and convince the former CEO of McLaren Applied Technologies, who just retired and was looking for his first portfolio gig. So he came in as chair. He then started acting in an executive chair capacity. So he's doing a couple of days a week as a consultant supporting the 2 founders. Fast forward, they then raised the seed round, brought on some venture capital funds. Then the next evolution began, which was how do we further bolster the capabilities of the board? Well, again, through that chair, two people that he knew, guy who'd set up the battery division at Johnson Matthey, a guy who'd listed two companies in the US in the battery space, both joined the board of Anaphyte. Then again, fast forward, that is sort of, again, continuing to de-risk the technology and making progress. Next thing that happened was the guy said, we think we need a chief commercial officer. And eventually the realization happened there was what they really were looking for is someone to come in as a CEO. And so then you led to that classic transition of the two founders stepping into specific roles. One became the CTO, one became the CEO, as the COO. And where did the CEO come from? Well, it came from the network of the people at the board level who were able to identify candidates. So when I talk about venture scientists, I think it's really in this phase of pre-Series A. That's just where that's the most critical component, right? And it was true in Xylo. If I think about some of the scientific team that I worked with in Xylo, probably some of the best scientists I've ever met in terms of capability. And ultimately, for a whole host of reasons, that scientific capability combined with their venture skill sets is kind of what I believe led to the success of Xylo in that context.
Presumably, this is not just a simple matter of any academic will do, in the sense that, I mean, I spent a bit of time in university, and I can think of people who would be absolutely fine in a commercial environment, and people who would be absolutely awful in a commercial environment. Presumably, you come across, it's not a case of just because someone is good science, they're going to make a good company.
No, absolutely. And I think that's what I'm talking about around it's the identification of the venture scientist talent component as part of that story, right? So quite often an academic PI, they're never going to spin out a company themselves because they're the academic PI. They've spent their entire career focusing in on becoming a tenured academic, having a research group and building out that capability. They don't have the risk appetite to go and join a really early stage startup full time and commit all of their focus onto that aspect. Mm-hmm. The only time I've actually seen that happen was in one of our portfolio companies called Exciting Instruments. The professor, a guy called Tim Craggs at the University of Sheffield, actually bootstrapped the company. So span it out of the University of Sheffield, bootstrapped the company, got they were doing a piece of hardware for obtaining biophysical measurements for drug discovery purposes, bootstrapped, CE marked, sold 12 of these instruments into academia, and then went out to raise his first round. And I was sitting there thinking, you just don't ever see that. You never see this entrepreneurial drive from the genuinely world expert in this particular area going and doing that. And that for me, when we were looking at a company, was kind of just like a really big differentiated green flag of just the entrepreneurial drive to turn the thing into something. So yeah, you're absolutely right. Not everybody is the right person to go into the company. And it actually takes me back to one of the things, I mentioned that I was interested in tech transfer. One of the ideas I had at the time was, why don't we have talent scouting mechanisms that match the best entrepreneurial talent within a cohort of PhD students and postdocs to the best pieces of IP within a portfolio of a university? Right. So that matching of talent to IP, because one of the big myths is that it has to be your PhD that you commercialize, the work you're researching, right? And the reality is a lot of scientific PhDs and engineering PhDs are blue sky research. And that's obviously important. We need that in terms of, how we advance our knowledge. So often what that leaves is gaps where IP emerges from a particular group, but you don't have the right person to take it forward, or vice versa, where you've got the right person to take it forward, but the thing that they're trying to commercialize is a kind of sort of mid-tier technology capability. And that's something we see all the time.
Yeah, you end up with ideas looking for a problem rather than the other way around.
Yeah, and actually we talk about science solution fit in how we triage companies. So it's not just solution market fit, it's science solution fit. Once you've evidenced there's a real problem that someone's trying to solve, does that particular scientific approach provide a solution to that problem? Because I think the thing that I've, noticed over a long period of time is like exactly what you just said. So often people publish research. I mean, just take a step back. It kind of comes from the idea of how you even construct an academic paper, right? Every single scientific paper you'll ever read, the first paragraph is at this particular scientific research in this paper is going to save the world. It's going to cure antimicrobial resistance. It's going to cure cancer. And so I believe that process of how you construct and write papers reinforces itself. So people very much believe there's these real big problems that this technology can solve. But actually because they're not in the headspace of, is this a real commercial problem really embedded in that thought process? By the time you then go out and start thinking about it, it's almost too late, right? There's things like iCure. I don't know if have you come across that before?
No.
Right? So Innovate UK have this translational funding pot called iCure, and basically it provides a stipend to an entrepreneurial lead to spend 3 months researching a particular market area, doing customer reference calls, speaking to different industry players to try and validate whether the problem is a real problem or not. And then obviously whether their technology can solve that particular problem. It then leads on to the idea of, yes, it allows you to spin out of a university, and then there's a specific grant pot that you can normally apply to, which can act as non-dilutive grant funding alongside your first pre-seed round. So programs like that are quite effective at trying to help you do that piece of work. But yeah, science looking for a problem to solve is always a big challenge.
Yeah, and fair, it's not just science. I think I see it across the venture area where people come up with this great. I'm using quotation marks here for the word "great" idea, but whether it's commercial is another question.
I mean, there's an interesting thought there, right? Which is, you see this all the time. People are very protective over ideas. Right. But an idea is just an idea. It very much comes down to how someone can execute against that idea. And, we're probably one of the few investors that are happy to sign NDAs with companies because most of the companies we're investing in have confidential information related to their IP portfolios and other considerations. But you often see it in the broader venture ecosystem. When a founder comes up and is trying to get someone to sign an NDA to get into a data room, you do sometimes have to ask yourself the question, what's actually really confidential there in the context of information, especially when you consider who you're sharing it with, which is a venture capital fund.
Yeah, and certainly this is something we've come across several times, as people asking for NDAs, and we're like, why? We're not going to, we're not going to compete with you. We're not going to steal your idea. And secondly, as you say, the value is not in the idea per se. It's the execution of that idea where the value creation is. I mean, we could probably sit here and create 10 ideas probably in the next 5 minutes if we really wanted. Well, 9 from you and 1 from me, probably. But they're, they have no value because we're not going to do anything with them.
No, exactly. So I think it's an interesting way of thinking about what's the important aspect for these companies. What is the information you're trying to think about, and how are people really validating that the thing works? I mean, we had it on a diligencing exercise, right? So we were looking at this particular technology. We probably asked in our first external reference calls with kind of key opinion leaders questions that were very product orientated. If you had this thing tomorrow, how would it change what you're doing? Would it be a benefit? How would you use it? It was very product orientated. When we changed the questions to, in this particular case, how are you triaging patients in that particular pathway? What decisions are you making to decide whether you go down path A or path B? What data are you collecting? Once we started probing the actual way in which, in that particular case, A&E practitioners were actually triaging patients presenting to them in an A&E department, it all of a sudden became clear that this product was a kind of nice to have, but wouldn't necessarily change anything from a patient perspective. And so actually the way in which you ask questions, I think it's called the mum test, right? It's like asking leading questions will get you the answer you're looking for. One of the biggest key things that we talk to early stage companies about, it's like, oh, I've got all of this traction from these people saying they're going to use my product. And when you actually probe that a little bit more and you say, well, did you talk to them about price? Did you talk to them about actually buying this thing for a particular price? Everyone goes, oh no, we didn't talk about that. Everyone will say your idea is great when there's no economic reason for them to say otherwise. But as soon as it comes down to, well, will you actually pay for this thing now? Bringing it back to the life sciences, that's true across life sciences, right? If I want to convince someone to do a proof of concept study with me to prove that my technology improves their product, for example, and I need to collect data on that, there's a big difference between doing that for free and doing that as a paid proof of concept study. And again, those are things that we try to dig into when we're analyzing deals to try and understand there's like hierarchy of commercial traction, even at pre-seed and seed stage, where the main thing has to obviously be technically de-risking the technology.
Yeah. And certainly we see a lot of people in venture area investing at the stage where there is some sort of revenue, where they've got some cash coming in. And I think it's partly because exactly the reason you talk about. At the end of the day, most people are actually quite nice and they don't want to turn around and say, that's a terrible idea, we don't like it. They'll sort of say, that's interesting. Yeah, we might use that, but knowing at the back of their mind, they probably won't until you actually say, yeah, show me the money.
Yep. I mean, I listened to a podcast many years ago. It was talking about the same is true on reference calls for hiring, right? Most people will not tell you the truth about an individual on a reference call because they're nice and they don't want to offend people. So actually, the way in which you ask questions of the person you're giving a reference call on to elicit how that person performed in that role when they worked with them previously is the thing you want to spend time focusing on, because again, it gives you better insights into, in that case, the person you might be hiring.
Yeah, the cynical side of me said that I'm sure that at least one or two occasions that I've heard of people who got really good reference calls from a current employer, and the feeling was that actually they wanted rid of them,
right?
Which is terribly unfair. But
yeah, no,
what I really wanted to ask you about today was using AI,
right?
Because we spoke last week because we're currently doing a review of your fund.
Yeah.
And we were chatting, as we do, about investment process. And you, probably more than any other manager I've come across so far, are using AI in your process. And I thought that would be really interesting because we're all talking about this conceptually and we're all talking about it in companies, but actually using it in venture capital, I think, is a really interesting idea. So do you want to tell us how you're using AI?
Obviously, everybody's aware of the rise of LLM technologies.
Mm-hmm.
There's different brands depending on your different persuasions in terms of what you use them for. My experience of utilizing ChatGPT, Claude, Gemini, Perplexity, all of these different tools, they've all got different strengths and weaknesses in terms of the different areas. From the start, one of the big things we've focused on is scientific due diligence as the underpinning to companies that we're looking to back. It's like Maslow's hierarchy of needs. If the foundational layer of the company doesn't stack up, doesn't matter how big the market is or what the commercial problem is, like if that doesn't stack up, everything else falls down. So we always build our picture up, and as we have done from the start, is kind of start of the science, think about the people that can deliver that, think about that, how that blends into the IP strategy, how that blends into the real, is this a really defined market problem? How big that market potential could be? How do they actually get there in terms of, plans and so on? So we've been thinking about how we can use LLMs to help with the knowledge collection piece, right? So LLMs are doing one thing, they're commoditizing knowledge. So previously, a lot of funds would have said, well, we've got lots of proprietary knowledge around how we analyze and diligence investment opportunities. So your very massive funds would have access to copious amounts of data, both things that they've looked at, things that were publicly available. And you'd often have data scientists employed in the really big funds to just even interrogate that data. We're now in a world where that just isn't true anymore. Anybody can take a pitch deck, upload some pretty basic prompts, and get to a pretty consensus view of what is the consensus view in the world of this particular technology in a particular marketplace. So in terms of doing the desk research, which would have previously taken 10, 20, 30, 40 hours to put together that knowledge, that's now all available at literally a click of a button. So actually what it tells you is, I want to use that as a triaging tool to understand, does it fit my investment thesis? What are the key assumptions that the company's making that I need to check out later in diligence? What are the reasons why I think this might be an interesting opportunity space? A lot of being a venture capital fund is about, you're kind of predicting the future, right? What do I think the world will look like in 5 to 10 years' time? So it can help you kind of frame your thinking. And I think that's currently the way I'm thinking about the utilization of AI tools, LLM models within Empirical Ventures, is can it augment our thinking and allow us to triage opportunities to then allow us to focus our time on the most important bit, which is understanding the people in these companies, right?
Mhm. Yeah.
I often describe venture as basically the equivalent of a marriage, right? In terms of lots of relationship. You want to spend time understanding who these people are that in front of you, why there's alignment between you as a fund and them as a founder. Are you going to be able to work together? Does that dynamic work? And actually, the more time you can focus there rather than on the collection of information, I think is a really interesting utilization of some of these tools.
Yeah. And I think there's a couple of questions that occur to me, which is, and these fundamentally come down to that perhaps AI is not perfect. Maybe it never will be perfect, but, certainly it has its shortcomings. You mentioned about, in some sense, the science you're looking at is innovative. Does that restrict what AI can tell you about it? In a sense, you look at consensus, if there's lots of information on a topic, then I assume AI is probably turning out something that's pretty good. But if you're doing something that's a bit more innovative, maybe the information isn't quite as good as it might be otherwise.
Our experience of using these tools for that sort of early stage triaging is that there's a huge amount of information available out there on the web that these tools can pull from in order to create the picture of the foundational side of things. So given the fact that we're typically, as a fund, we aren't investing in science risk, right? That's one of the things we try to make sure we're not investing in pure science risk. Anything that's like academic curiosity type question, or what if that was true, or what if this happened, what happens? We're trying to invest in things where the foundational principle has been defined, and then it's about then turning that into something that you can start to move through that kind of TRO level. So actually there's a huge amount of information there that's available, abstracts for papers. You can now plug straight into Archive, the preprint server, so you can get full academic papers where it can pull and summarize the key findings within a particular field. You can use it to say, well, okay, if I was being hypercritical of where the gaps are in the data here, what does that look like? And again, it's just about this thinking side of how you're making decisions. I often said that a due diligence exercise is as much about how I think as a fund manager as it is about what the company's doing, because it's a time-stamped opinion of what you believed at a particular point in time. And if you then want to make a decision on following on to a company in the future, you can look back at your notes, and if they're comprehensive about why you've made a decision, you can then see how things changed. That time point analysis of founders is one of companies is one of the biggest challenges in venture, because when someone comes to you for the first time raising capital, you only see the shiny side of a company. It doesn't matter how hard you dig, there will always be things that they present in a certain way that as soon as you are then invested in the company, the reality begins to evolve where you're like, well, okay, this maybe is the time slipped here, or actually there's a bigger technical challenge here than we first thought. And that's kind of a natural part of the early stage venture investing. But that's where these tools are really good to augment your thinking. And you talked about the kind of accuracy and hallucinations. If you purely relied on AI to make investment decisions, and now bearing in mind, I was at an event recently called On Stage, which was an LP for an institutional fund. It was an introducing capability between investors and fund managers. And there was 2 funds there that were making investment decisions purely based on AI research across a huge array of different data sources. Sourcing, investment decision making, it was all AI driven. There was obviously a human as a founder of that fund directing operations, but it was very much this kind of pure AI decision making. The challenge with that, obviously, is that as part of something we talk about all the time, right? We invest in the physical world. We invest in companies that have real products that you can touch and experiment in the lab, like they're real world products. Ultimately, founders and companies are real people. You need to have other real people to interact with and move things forward. And I think it's that connectivity that these tools are actually enabling you to spend more time focused on. And actually the data collection piece, I've read a lot of due diligence from other funds, and so much of it is just a regurgitation of this is what the company does. It's not actually critically analyzing whether those things are true or not. And I think that's something that we often think about, right? Is the analysis we're doing actually probing below the surface of what the company tells us it's doing? And again, these tools enable you to get there quicker. And that's the interesting bit.
In terms of progress about AI, I mean, you mentioned hallucinations, and if we'd had this conversation 18 months ago, I suspect hallucinations would probably figure a lot bigger in our discussion than they do now.
Massively. Like the rate of progress that we're seeing is just utterly insane in terms of how effective these tools are. The latest version of Claude Cowork, right? So this is now an AI agent that can actually do sequence task capabilities with specializations in different tasks. So, you'll have noticed, I think it was all over the news recently, a lot of the big publicly listed law firms lost something like 15% of their market capitalization when Claude released Cowork with all of these legal specialization plugins that you can put into it, right? Because everybody knows, I mean, outside of Empirical, I run a gym with a friend of mine. And whenever I have an accounting question now, I don't go to my accountant, I just go to ChatGPT or Gemini. I get a few different opinions. That's another thing you can do here, right? You can use multiple models to generate an output, and you can then sense check whether they're telling you the same thing. You can also ask it to always reference the sources from which it's pulling through. So you can always click and say, okay, right, well, that's coming from, in this case, HMRC guidance on, a particular VAT status of something, that kind of thing. But I think that is just definitely shifting. That's from an operational perspective, right? I think all these tools are really becoming, I only see us moving more and more in that direction.
And that actually raises the question. I mean, you talk about there's a limit. How far can the use of AI go, do you think, in venture capital?
I think there's one camp of people that believe that we're already seeing that. Have you come across Bordy?
I know the name. I don't know them very well.
That started off as an AI tool for facilitating introductions between companies and investors. It then went out and said, well, okay, I've got the best proprietary deal flow globally. I now would like to raise capital from investors and deploy a fund into the companies that I'm introducing to funds where I can track which deals get traction and then invest in those companies as well. And all apparently, I think I use the word apparently because you always have to be a little bit skeptical of what you see in materials that you see on LinkedIn and other domains, right? Because it's all who's writing that material, why are they writing it for your audience, that kind of thing. But apparently they've been able to raise a significant amount of capital into a vehicle from leading investors that are interested in getting the alpha that comes from this type of sourcing origination engine. Now, you could argue, well, how much diligence is this fund doing? well, maybe they're relying on the fact that they don't have to be the one diligencing those companies. They're just saying, well, if this fund's in and they've done the diligence, we're happy to go in and follow, right? There's a huge amount of the venture market that just follows other investors.
Absolutely. And if you've got Sequoia or Andreessen Horowitz, whatever, there's a lot of people who would be very happy just to piggyback on with those.
Yeah, absolutely. I mean, again, rightly or wrongly, a lot of the just investor base generally still likes the signal of, well, if you've invested alongside General Catalyst or Cosmo Ventures or DCVC in our sector, right? People are like, oh, you guys must be good because you've invested with those signals, right?
Mm-hmm.
My view is, I don't think it really says anything about how good you are as a manager, except the access piece, right? If you're able to get access to those deals reliably, then that becomes then a sort of, it's the origination question. We've had a lot of conversation internally at Empirical, right? We spent a lot of time thinking about process and how diligence and pick, but ultimately your picking capability is only as good as the pool from which you're picking.
Mm-hmm.
So actually the origination piece becomes the really important aspect, because the better quality of deals that you're looking at, if you're then applying your picking capability to them, your overall performance capability or upside will be bigger because the quality of deals you're seeing is higher. And, that's where things like Ben's podcast, his YouTube channel come in, right?
Which is exactly what I wanted to ask you about, because this is a topic I was really interested in talking about, because you could probably tell that your colleague, Ben Miles, has a really popular science channel. I checked out 2.27 million subscribers.
Yeah.
Which I wish my podcast had, but
one day, Brian, one day.
One day. Do you want to tell us about how having a podcast or a YouTube channel like that works for a venture capital firm? Because it seems to be a really interesting and novel thing.
As with all things in the world, nothing's truly novel and unique. I think Andreessen and Horowitz were probably the pioneers of the idea of the marketing flywheel within venture, right? Mm-hmm. So if you go back from the point at which you make an investment, and you go a certain number of negative years before you make the investment, and you go a certain number of years after you've made an investment, prior to a company being founded, people need to know who you are as a fund, such that when they go, I want to go and raise capital, everyone has the ambition to go and raise capital from the best investors in their public perception of who are the best funds in the market. So the first one is people need to be aware of who you are, right? I think that's where having a platform like Ben's YouTube channel becomes really differentiating, because people know who he is. He talks about his work at Empirical on that YouTube channel all the time. That creates the first point of call, which is brand awareness. Do people actually know who you are? The next bit then is being generally useful to those people, right? If they're not thinking about an idea, can I create content in those platforms, whether that's community orientated, that allows people to upskill, allows people to go on the journey towards entrepreneurship within the frames of you providing value. So you're now building trust within that audience. So that on day one, when they go, I'm going to go and raise capital, the first person that they put a application into is Empirical Ventures. That's the goal with having any of these kind of big picture origination platforms. If you then take that forward, they build a company, are wildly successful, and ultimately then are looking for where they can go next, that kind of second time founder type concept. You start to create this flywheel effect of people that are going, okay, right, well, I've worked with Empirical. They were really good investors. Anyone else I speak to, I would then recommend them as somebody that I'd like you to work with. So I think that's where Ben's YouTube channel is really interesting from a visibility perspective. People know who we are when they get out of bed and want to start a science company.
And the never flip side is that Uncle Tom Cobley and all can come along and I hesitate to use the word spam, but effectively from your perspective, they're spamming you, because they come along thinking, well, here's these guys running venture. Oh, I'll just apply to, not quite regardless of what they do, but I think there's a danger that people come along and say, yes, well, what venture fund do I know? Oh, I know Empirical. And you get flooded with things that are just not appropriate for you.
Yeah. So nicely circles back to the triaging piece, right?
Mhm.
So two things we do for top of funnel deal pipeline management. One, we're very explicit on our website about what it is we're looking for. We say we're a pre-seed, seed stage investor. These are our sort of typical ticket sizes. These are the sectors we invest in. Check out our portfolio page. You can see the sorts of companies that we're investing in. If those things fit, fill out our application form. We have a series of questions that we ask people. It creates a bit of buy-in. It's not just a submit your deck and that's it. There's a little bit of just what's your round size, how far along are you on that process, just tell us a bit more about it. Obviously, is it SCIS, EIS qualifying as again a criteria? So what that does is it filters out the spam, because unless somebody is really kind of exceptionally not paying attention, they're not going to spend their time submitting material that they know from the outset is probably not a fit for Empirical. So that's one aspect. And then the second one is the utilization of AI tools, right? From a pitch deck alone, I can triage whether that company is the right stage, raising the right amount of capital to be a fit for our portfolio construction strategy, whether we believe that there's like genuine innovation potentially in that technology, the background to it. So we can triage things pretty quickly, and that then allows us to focus our time on the high signal opportunities that kind of come in through that big picture platform.
And the other thing that I really intrigued when we were chatting about this last week was you can actually use this for existing portfolio companies as well, creating introductions.
Yeah, I think there's a really interesting evolution for us of utilizing Ben's YouTube channel. So, for example, he's just done a deep dive video on the PsiQuantum technology. They're a UK export, as it were, founded in out of Bristol. They've still got one of their HQs in Daresbury in the UK. Their main HQs now are in San Francisco. They're building a quantum computer, right? Proper, what you'd almost describe as mystic tech. There's not really a defined time period over which we think this might be a reality. Other technologies that people might think of as mystic tech might be something like fusion. People have been saying we're going to have fusion reactors in the next 10 years, and 10 years comes and goes. And
they said that for 30 years.
Yeah, exactly. So quantum computing could easily be classified in that bucket. Anyway, he did a deep dive video, YouTube, for 30-minute explainer video talking about all of the fundamental principles of how PsiQuantum are trying to build a quantum computer, identifying where the science still exists that needs to be invented. That's interesting, right? Because I just said that Empirical Ventures isn't looking to invest in science risk, but there are plenty of investors out there. Bearing in mind, PsiQuantum just raised $1 billion late last year, who have got the firepower to invest in science risk. So that's an interesting thought to have. But he was able to do a deep dive on that company, and now he's got the contact details of all of the C-suite within PsiQuantum, right? And they're loving it because they're like, oh man, your video is so good. It like helps us to talk about what it is we're doing to a general audience. So there's now that trust piece. So hypothetically, if Ben needed to go back to PsiQuantum tomorrow and say, oh, well, actually, guys, we've got this portfolio company that we've invested in, and they're looking to see if they can work with you guys to explore a potential utilization of their technology. Like, would you be open to an introduction? It allows you to create that C-suite level access in like globally leading deep tech and life science companies that I think few other people could compete with. And I think that becomes really materially interesting. It's not something that we've done massively yet. It's something that we're kind of evolving, but that's one direction of travel we could go in. I believe this week he's interviewing 5 of the past 10 Nobel chemistry laureates, talking about their science, their technologies, how they're viewing the world. Again, that's going to be super interesting. Is there an opportunity where we can bring those people in as advisors to Empirical? It's not something we've done yet, but who knows? That might be where that type of platform takes you. So I think there's a lot of opportunity for Empirical to benefit from that platform over the next, and obviously our portfolio companies and investors as a byproduct of that over the next kind of 5 to 10 years.
Yeah, that's certainly very interesting. I mean, obviously as someone who's built a podcast, we've had similar ideas running through our heads at this end.
Yeah, sure.
In terms of, and we have had people who come to us as clients because they found us on the podcast kind of thing. So,
well, I think that was me, Brian, right? I think I listened to your podcast and thought, oh, maybe I should see if we can get Empirical in front of Brian at some point.
And here you are. Here you are. So yes, it does actually work sometimes. What I'd like to do now is move on to our favorite questions. So I'm going to throw these at you, and we'll get your answers on see your thoughts. So, what was the most recent publicly announced investment you made, and why did you make it?
So we just invested in a company called Soloxium that's based in Oxford and Middlesbrough that's doing processing of dilute solutions of rare earth metals and palladium group metals. So for a long time, if you think about the mining industry, mining tailings, anything like that, you'll generate huge amounts of wastewater with quite dilute concentrations of a particular metal that's high value, often with impurities of other metals, arsenic, mercury, and so on. Very hard to do anything with. Often these waste streams end up just getting left in the environment, all the challenges that come with that. But obviously, you've got a potential commercial valorization route there, because you can, in theory, extract those metals because they have a very high value, right? So Soloxium had a really interesting approach which is all of the incumbent technology relies on a solid liquid interface. So you have an ion exchange resin that you add to water, got your metals floating around in a non-dilutive way, and you're trying to get them to interact with the surface.
Mm-hmm.
And so you're limited.
They stick to it.
Yeah, exactly. And you're limited by the surface area of that solid liquid interface. So what Soloxium did was said, can we turn that capturing piece into something that is homogeneous? It dissolves in water, but that you can use to capture and complex the metal components, and then by adding a second solvent, precipitate out that mixture and isolate the metal. And that's basically what Soloxium have developed. They've got this polymer called Selectal that's completely water soluble. They can tune the little fishing nets, as it were, on the end of the polymer to complex different metals, and they can do that selectively over metal impurities. So they're looking at utilizing that for anything from rhodium capture to gold. They're a relatively mature company for us. It was a little bit later stage than we typically invest in. We invested alongside Oxford Science Enterprises and a strategic investor in that company. I think that's a really exciting technology, one that, again, science foundational level, really differentiated. But in that case, they're actually relatively mature. They have a processing plant up in Middlesbrough that's processing multiple tons of waste streams, especially from the ag chem industry. A lot of ag chem chemistry uses metals as catalysts for chemical transformations. What do I do with this waste stream? Well, now you can send it to Soloxium. They can recover the metal, and they can take that forward. So yeah, that's an investment we made recently that I think is quite exciting.
Well, given all the sort of news about or rare earths and politically sensitive, I think anything that can enhance yields of that will clearly has commercial possibilities.
Yeah. Do you know what's interesting there? Just this week in Chemistry World, that's what all the VCs should be reading. The editorial article on the front page was all about rare earth metals supply chains. And within that article, the common myth is rare earth metals aren't actually that rare.
Mm-hmm.
They're just distributed at very low concentrations in lots of different places. So the challenge is extraction at commercial scale. Places like China have basically dominated the supply chain of rare earth metal production. And because of that, they've been able to then dominate the market in terms of price point at which they can supply the market with those rare earth metals. So actually, the idea of creating sovereign capabilities for rare earth metal production using Soloxium technology is kind of an interesting angle for them to tap into over the next few years.
Yeah, certainly. And I think certainly, as you say about rare earths, not that China has them, they've invested in the processing.
Yes.
In a way that nowhere else really has. and clearly the US in particular, but other countries are probably looking to turn that around. So yeah,
exactly. Hopefully, to the benefit of Soloxan.
we certainly hope so. So the classic VC triumvirate of market, product, and management. We know they're all important, but which for you is the most important?
Management. Most of my angel portfolio that's gone on to raise an A round at some point pivoted the underlying technology in some ways very drastically. They completely pivoted the science they were doing. Someone discovered something along the way that turned out to be more commercially interesting in a particular evidence problem space. And that's ultimately what led to more traction. And that's what led to them being able to go and raise an A round on the back of that traction and de-risking of the technology. So if I know that to be true, the pre-A round pivoting of where you apply the technology happens all the time. Actually, it comes down to the capabilities of the people to use their entrepreneurial nose and navigate where to apply that technology on that pathway. And I think that's where, for me, the team is just so important in terms of who it is you're investing in and how capable they are as people. Probably if you ask Ben, he'd say market. And the reason he'd say market is it doesn't matter how good you are as an entrepreneur, if you're playing in a capped market space, then you will ultimately have your upside limited, right, in terms of where you can go. But maybe a good example there is I caught up with Rebecca from Empirical Ventures, and they had a good exit last year with Organox. It exited, I think it was $1.5 billion. They were very early investors in that company. And she said to me that it was super interesting, 17-year journey from start to finish. Like, that's interesting. She said the first kind of like 3 to 4 years, there was one employee only, right? It was a very tight organization. And it took them quite a long time to actually invest in the company because their assessment said that the market opportunity was only 150 million globally. That changed. A commonality in venture is that good venture scale opportunities often expand the markets in which they play. And so I think that's an interesting aspect of, is it market, is it product, is it management? I think the market piece for me, really interesting, especially deep tech life science companies where you're investing in scientific innovation. Sometimes these markets don't even exist yet, right? We've got a company called Barton Blakely that we invested in that's reacting CO2 with silane in a jet reactor to produce silica gel, right? Nobody's ever done that before at any sort of scale. That's when they develop their first pilot plant, they'll be going online later this year. That will be it'll be a first of a kind system globally. So yes, you can look at the silica market, right? You can say, well, this is what the silica market looks like currently. That's partly why this company's interesting. But nobody really knows who might be interested in utilizing CO2 waste streams from their industrial outputs and actually using it as a feedstock in a reaction, produce a high value output at the other end. Yeah. So that's an example of that kind of, who knows where that market might go and what that might look like if they're successful.
Yeah. I think there's numerous examples of that in venture capital.
Yeah, absolutely.
So tell us about a time you failed and what you learned from it.
When I left academia and joined Xylo, I very much tried to change that job into something that I wanted it to be, rather than delivering against a job description. So I remember having a conversation with Andy and Harry quite early on at Xylo, where I was kind of doing all of these activities, trying to help them, be successful. If I look back and actually said, was I delivering a job description that they needed me to deliver as an employee in that company? We had a difficult conversation quite early on, right? About where my focus was. And I was very much trying to turn that job into something that I thought I wanted it to be. And that was a challenging time, right? It was a bit of a hard look in the mirror of well, I either am happy to focus on just delivering the job description, or I need to think about taking and looking for another job. But that was probably the first time where I felt like I was working really hard, but that working really hard was being applied in a non-productive way if you're the person running that business. 10 years later, I think it's interesting how that continues to be something I think about when I'm looking at companies today. When people are doing their early hires, especially if they're hiring scientists coming out of PhDs, postdocs, it's, does that person still want to be doing lab work? Or do they really kind of want to be moving out of the lab because they've just spent their last 4 years doing a PhD that was really hard? And now they're like, I've kind of had enough of that now. I'm ready to sort of do a management role or whatever it might be. So I think that was an example of something that didn't quite pan out at the time. And ultimately, I made the decision to stick it out and really focus in on what it was they were asking me to do. And, hindsight's a wonderful thing. And that turned out to be the right decision. It's interesting in the world of growing a business, right? Empirical Ventures is an emerging manager in the world of venture capital, right? There's lots of things that we've done along the way that, I don't know have always been wildly successful. But I think in any kind of area of, business related activity, and this is again why I like scientists, generally is that persistence, right? It's turning up every day. It's slowly breaking down the tasks, moving the needle forward, just that persistence to keeping going, even in the face of hardship, is just such a critical skill that I think I look for. And, I guess I'm trying to say I've made lots of mistakes along the way, but it's I think that persistence piece is something that I often come back to.
Yeah, no, it's definitely something that you need. It's a key thing for success in venture. It's a long-term game.
It's a very unusual sector in that sense because people, no one's marking your homework for sort of 7 years, right? It's kind of hard to, I often think I've invested in a lot of funds myself, right? And when I'm looking at those funds, I think people often look at track records, especially in early stage venture and emerging managers. And they go, okay, well, what's your track record? Well, as I just explained, Organox exited after 17 years, right? So long time horizon and then massive outcome, right? Huge outcome for Longwall and all of the investors in that fund. And I think that time horizon means that you're looking for people that have got repeatable processes, right? That's the thing that I'm looking at. How are they consistently making decisions? Are they people that are going to stick it out, right, for the long term, right? I think that's the other aspect I look for when I'm investing in funds. Both non-tax advantaged and tax advantaged funds have done quite a bit of both. That's how I'm kind of thinking about the world when I'm kind of putting that lens on it, I guess.
Yeah, no, I think that's a good lens to look through. So as regular listeners know, I'm an avid reader and always looking out for ideas. Are there any books out there you like and would recommend?
I got it out so that I didn't forget them. Anyway, it's called Clear Thinking by Shane Parrish, The Art and Science of Making Better Decisions. The guy used to work as a spy in the US, and he basically talks around how people think about making decisions and acting on those decisions. So yeah, really enjoyed that book and would thoroughly recommend.
I haven't heard of that one before, so that's definitely going to get added to my wish list.
Yeah. Good to hear.
So if anyone wants to find out more about what we're doing at Empirical Ventures, where should they go?
Head to our website. People can register if they're interested in setting up a call with myself to learn more about the fund. We have an introduction deck that just sort of gives you a summary of who we are as Empirical Ventures. If people are then interested, they can then register for an investor account on our online portal that allows them to do all of the classic classification stuff. And then we can obviously share with them promotional materials thereafter related to the relative funds that we're raising for. Obviously, the current tranche is open until the 31st of March. So if people are interested, they can apply via the website. It's also got all of our portfolio companies, blog posts, that sort of thing on there.
Great. Okay. Well, thank you very much for coming on today, Johnathan. Really enjoyed chatting with you and finding out in a bit more detail about some of the things that you're using. It's been really interesting.
Great. Well, yeah, thank you very much for the invitation, Brian, and looking forward to listening back.
I hope you enjoyed the conversation with Johnathan. It's great to speak to someone who is using new technologies for real and see how they can be deployed effectively now. As usual, you can get full show notes with links at harmonandcode.com/podcast. You can subscribe to the podcast on all servers and players or through the link in the show notes. If you like what you hear, then please tell a friend or colleague or give us a review on your favourite podcast app. We can be contacted at inquiries@harmonandcode.com. Thanks for listening, and we'll be back in 2 weeks' time.